Hi, everyone. This is Jason Burek of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a very, very well-known for you resource investors out there. He's an investor, he's a best-selling author, and he's also a top-notch speculator. So thank you for joining us here today, Doug Casey, founder of Casey Research.
Thanks, Jason. It's a pleasure to be here. I'm speaking to you from Sao Paulo, Brazil right now. Where are you?
I'm unfortunately right outside of D.C., a place I know you don't like very much.
No, my heart goes out to you.
Yeah, I know you went to college, I think, around here in the Georgetown area, right?
Yeah, I did. I misallocated 4 years of my time going to Georgetown University, and I would comment that it was more beneficial to go to college then than it is now. Today, I don't see the point of going to college at all unless you need to learn a trade like doctoring or lawyering or engineering or science, where the formal discipline and the lab work a university offers is perhaps essential. But most people don't do those things. Most people take English or political science or history or gender studies or something like that. These are things you should learn yourself. So
yeah, I would definitely agree with that assessment because undergraduate I got a history and political science double major, and the job market was not very kind to me. I had to add all these additional skills, like I had to learn Austrian school economics on my own. I had to learn accounting on my own. I even took MBA classes for a while, and I found the teachers there who are supposed to teach you, the basic accounting skills and other things. They're not teaching you useful, even finance stuff anymore. A lot of the theories, modern portfolio theory, efficient market hypothesis, these theories don't work in the real world.
Yes, precisely. And of course, most of the professors that you're going to be lecturing to you are unsound, and they clutter people's minds up with all kinds of incorrect notions that have to be unlearned. So I'd say that instead of being a benefit, going to college is actually a liability. And even then, if you go to a college just to hang out, you really should just go to one of the top 2 or 3 or 4. So at least the people you meet there are well-connected up-and-comers, even if they're wasting their time there too. But most people don't do that. Anyway, I guess that's a different subject to talk about the nature of education and how people don't educate themselves but expect some teacher who isn't doing anything, that's why he's teaching, to educate you. People have the whole thing backwards. But anyway, that's, like I said, that's a different subject, I guess.
Yeah, and I'm actually hoping that the internet and virtual classrooms will solve a lot of these problems going forward, because I think, people can just learn so much more quickly, efficiently, cheaper, learning everything and fact-checking things on the internet instead of books and professors who are blind ideologues. And, their theories have been more than proven that they don't work in the real world. And, they're still teaching these things.
I know, and idiotically, the public is still listening to them. So all I can do is, be a voice in the wilderness, as you are saying. It's a waste of time, but people think they need a college degree.
Yeah, I completely agree. And transitioning here now to more finance and market-related topics, we were talking a little bit before about the macroeconomic situation. So what is your view of the macroeconomic situation right now at this point? We seem to be, in my opinion, kind of in between. We have some free market forces in some asset categories, like consumer discretionary, and then we have, worsening stagflation in the real economy and other things like consumer staples, and, the asset prices also are rising on a nominal value. So how do you see things here in the macroeconomic situation right now?
I think that we're still in the eye of the hurricane. That's the analogy that I use. We entered the hurricane in 2007, 2008, 2009. We were in the storm. Governments all over the world have created trillions of currency units, and that's given people the false impression that everything's hunky-dory. It made them feel richer than they really were. It can, it perpetuated these unsustainable patterns of production and consumption that were going on for many years before that. But we're going to leave the eye of the storm and go back into the storm itself. And I think that's happening now. It's actually happening in Europe right now. It'll be happening in the US, China, Japan, all of these places. And it's going to be much worse than it was before because these trillions of dollars are going to result in lots and lots of inflation, retail price rises. So it's going to be much worse.
Yeah, I see worsening stagflation as a base case going forward because each time the Fed does one of these quantitative easings or stimulus programs, a lot of that inflation doesn't necessarily go into the U.S. immediately. You have the currency wars and the dollar pegs, and that inflation is basically because the base money is pegged by the foreign country central banks, and that inflation is exported immediately to the developing world. It goes into the commodity markets there. It goes into their into the global value chain, and it just starts, rapidly rising the cost structure for all of the goods and services in the global value chain. And then because the U.S., we really don't produce that much anymore, we have to import almost everything, that inflation slowly gets imported back to the U.S. in higher price goods and services. So that's the way I see things right now. I think eventually we can have a hyperinflation, but there's just not any money velocity, especially here in the U.S. in the conventional ways, because the lending and spending mechanisms, the transmission mechanisms here in the U.S. are not really working. You don't see the banks going out and making lending to productive business. The banks are making a lot of profits right now speculating with free money from Wall Street.
Yes, absolutely correct. Absolutely correct. And the banking system itself, all these banks are bankrupt because the basic banking system itself is unsound. It's got nothing to do with the way banks have classically been oriented, with time deposits and demand deposits being separate things, run as separate businesses and so forth. The financial industry in general is so bloated in the Western world. It's something like 20% of the economy is people shuffling paper with inflationary currencies. I don't know what it should be, quote unquote, in a free market economy, but it would be closer to 2% than 20% as far as I can tell.
Yeah, I see worsening stagflation because, like you said, people are just trading. The Wall Street guys are not making any real loans into the real economy for the most part. They're just trading paper back and forth with each other in the over-counter derivatives market and other markets and their high-frequency trading machines, and that's how they're making their profit. They're not doing it the conventional way. And then you add in the fact that also, besides the lending system not working, you see the inflation tax increasing, so you see margin compression on a lot of businesses here in the U.S., and then you also see the direct tax component, which I think for a lot of businesses and individuals is going to go up in the future, and then you see Obamacare and all these additional rules, regulations, red tape, which for the smaller firms, the ones that actually generate the majority of the job growth, that's going to hurt them more than the larger firms. And that's why I think the status quo, to maintain the status quo, they have to print more money. The political and economic elites have to print more money, and that's why I see worsening stagflation until velocity of money picks up.
Yes, I'd have to agree with you on all of that. So it's going to come to a very bad ending. I mean, there's good news, of course, mainly because the average guy out there does try to produce more than he consumes and save the difference. And that creates capital. So that's very good news. And of course, as long as he does that, then there's capital for technology to keep advancing. And those are the two mainsprings that take civilization forward. But what I'm afraid of is that at some point, when this whole ugly mess collapses, that the average guy who saves mostly in currencies is going to be wiped out. And that's going to be a social and political cataclysm when it happens. And I'm afraid it will happen.
Yeah, I completely agree. And people should not be saving in paper fiat currencies, like you said. I mean, they should be saving in physical bullion outside the system as insurance, at least a certain position of it. And then maybe they can buy some dividend stocks because those seem to be holding up a lot better than I expected them to, some of the consumer staple dividend stocks. And then maybe they can buy some resource stocks if they know what they're doing, if they go and look into the Casey newsletter products or some of these other good paid newsletters that are out there.
Yeah, I agree with you on the dividend paying consumer stocks, but even then, I'm rather scared because it seems like most of the people in the U.S. and especially in the U.S., though much more in Europe, are living off their credit cards, and they're going to have to cut back even on consumer perishables uh, as times get tougher for them. Another point that I'd make is that at past bottoms in the stock market, times like 1982, 1974, and going back further in time, the typical stock on a broad index was yielding 6, 7, 8% or more. In fact, in 1933, the Dow was yielding 13% for a while, and that was even after dividends had been cut. So I don't know. It's a very, very risky time where there are no bargains in the market at the moment right now because of all this paper that's been printed.
Well, I think the bargains are in the resource sector, but in terms of the real, the actual general stock market, I would say that all this paper fiat currency is being printed is just distorting the value of almost all the markets, like you said, because in an inflationary environment, in a stagflation or worse environment, from what is to come, I mean, shouldn't bonds not be being bought in this environment then? Bonds normally, historically, should not be bought during an inflationary environment until the interest rate starts massively rising and new bonds start being issued at much higher interest rates, right?
I totally agree with you. It seems to me that the biggest bubble in the world today, and of course, as these governments create more currency, it inevitably creates more bubbles. We had the tech bubble 10 years ago, then we had the real estate bubble, but now the biggest bubble in the world, bigger than those past bubbles, is the bond bubble, where everybody is buying bonds idiotically at historically low interest rates, reaching for yield. So that actually the surest thing in the world today is to be short bonds, perhaps by taking a mortgage out, but then you have to own real estate in order to have a mortgage. But if you do own real estate, it should have a mortgage on it financed at these interest rates today because it's going to be a gift.
Yeah, I think also shorting some currencies and borrowing some if you're a smart speculator and you know which central bank is going to devalue in the rotation there because they're all devaluing and they can't all devalue at once, otherwise it doesn't really do much, but they take turns basically devaluing. We have a coordinated market now globally. So, you're looking at Japan at this point, and down the road, I think the only way that they're obviously not going to be able to pay off the principal on their debt, so I think they're going to start trashing their currency, printing up more currency to start devaluing the value of their bonds in real terms.
That makes sense to me. This is why I continue to buy physical gold, even though I don't like to buy things that have been in bull markets for 10 years. But I think gold is going higher. And I think as a speculation, mining stocks are going to have their day in the sun very, very soon.
Yeah, now, the market has kind of changed in terms of financing. The producers are holding up fairly well compared to the juniors. We have these higher gold and silver prices, and yet the juniors are not being able. Many of the junior explorers, they've had to cancel a lot of their financings because the share price is already too low, or if they make a phone call, then automatically, like, I don't know, either a rumor's leaked or whatever, and the stock is down 30%. So do you think that the junior explorers, a lot of them are going to be able to survive with higher precious metal prices, or do you think as a speculator then it's just smarter to buy the producers then, because these guys, they're going to be minting money basically, and they're just going to have the cash flow to go in and buy those assets from the junior explorers who panic and sell out?
Yes, I'd have to agree with that because the juniors that don't have money now can't get money. Half of the Vancouver Stock Exchange is selling for under a dime. Uh, and if they're out of money, they're really out of luck at this point because they've got just normal running expenses from listing fees, office expenses, salaries. And then if they want to pay a geologist to go out and drill, you're talking about big money. So most of the companies that are traded in Vancouver are dead ducks. But that's the good news because the last time that happened was back in about 2001 when most of these nothing nowhere resource companies were turning themselves into internet companies, which was a sign that it was the time to buy the mining stocks and get out of the internet stocks, incidentally. Perfect contrary indicator both ways. So it's getting to that stage again now.
Yeah, I think the sentiment is extremely negative in the mining sector in general, but even more so in the juniors. And many of the juniors, like you look at an Andina Minerals or you're looking at Story Gold or Silvermex or some of these other guys, and it just seems that the prices that these guys have sold out for, it seems like a panic where the management teams, they didn't manage their cash position very well 18 months ago when the metals prices were higher and they could have, diluted then at a much higher share price, and they didn't do it prudently. And now, when they need to dilute, they can't raise the money, and they just panic and sell out the assets to a producer for pennies on the dollar.
Exactly right. That's exactly right. So I think now is a very good time to go shopping for small producers that have positive cash flow. That would be one way to play it.
I think that's very good. I agree with that. Looking at the other commodities, what's your opinion of the rest of the commodities bull market? Because I don't see the commodities bull market as having ended per se, but I see it as having changed from even 2009 when China was dumping over $1 trillion in stimulus into all those buildings and base metal projects.
Yeah, that's a good point. One thing to look at, I think, is iron ore. Iron ore has come down 50% from its peak, but it's still expensive, it seems to me. Um, all the commodities are up right now. The only commodity actually that I'm long, and I'm long this in a physical way, is cattle. Cattle have underperformed during this recent bull market of the last 10 years. But more important than that, nobody's made any money in the cow-calf business for not just decades, but generations. And that's why the cattle herd now in the U.S. is at a 55-year low. In Argentina, that's about a 55-year low in terms of the number of head. And a lot of reasons for that. But to me, this is why now is an excellent time to be long beef if you're in futures. But I'm actually long. Actually, I own cows, and I like that better because every year, every mama cow has a baby, and 2 years later, that baby has a baby. So it's a nice way to compound wealth if you can afford the current losses.
And that's a grass-fed beef that you're producing at your farms now.
Yes,
Oh,
now, because
excellent.
we've got well, we've got about 50,000 hectares down here, which is 125,000 acres, and we started that herd 5 years ago with 300 head. We're up to 2,000 head now. We bought in a few cows, but not too many. And on that kind of acreage, not all of it's good, but we can grow that herd to at least 10,000 head. And by the time we get up there, I expect that we're going to see cows much more expensive than they are today.
I'm waiting for someone to establish a farmland real estate investment trust. There's really not any that I know of right now. So a good farmland real estate investment trust where they start investing in farms that have grass-fed beef, that have bison ranches and things like this, for the healthy consumer, for someone who wants to support a better, more sustainable agriculture, with healthier food and things like that.
Yes, I think that's actually a good idea because uh, people, if you're going to feed massive quantities of people, then you have to engage in chickens that grow up in cages the size of shoe boxes, and hogs that are brought up in awful conditions, and cows that are finished in feedlots, shoulder to shoulder, under horrible conditions. But if you're in a position to avoid food that's grown in those conditions, then that's the kind that you want. And that's the kind that I want. So that's the kind that we try to grow. I agree with you.
Yeah, and I think there could be a good investment opportunity for someone there who wants to start a real estate investment trust like that. I think there would be a really good demand for that, for investors to want to buy and hold the shares like that, because it could start producing excess cows, and you could sell maybe milk cows and things like those.
Yeah, that's true. Of course, I've got a dairy operation down here too, and just like the beef operation, that's cash flow negative at the moment too. But these things will change, and so I'm willing to tough it out, looking for the good times to come. But when it comes to setting up a partnership, you're quite correct. I think that would be a good thing, but I don't want to do it personally, just because when you take other people's money, you've got obligations, and unless you're paying them something every year, people get unhappy, and there's liabilities, and then you've got legal costs and accounting costs that you don't have if you do it for yourself. So it's a good idea, but that's a separate business, and not particularly one I want to be in.
Yeah, true, especially if it's here in the U.S. and there's even more excessive rules and regulations and fees.
Oh, that's right. I mean, anybody that's in business anywhere in the world, but especially in the U.S., is a hero as far as I'm concerned, because they're putting all their capital and even their personal freedom on the line trying to do business every day. At this point, if anybody's actually got enough money to live the way they want to live the rest of their lives, I'd actually suggest that they sell out and do that, because the risk-reward ratio in business is just not what it should be, or even once was.
Yeah, I completely agree, and we're kind of following that path almost to a T where Ayn Rand wrote about in Atlas Shrugged. I mean, we're seeing business owners right now start to move from state to state, trying to manage all the rules, regulations, and all the other tax consequences. I mean, they're dealing with the inflation tax too, but they're lowering their tax bill in other ways. But we're not at the point yet where people have completely gone on strike yet. And I think we're a little bit, we move a little bit closer towards that point every year when the taxes go up and things go up like that. Because, I mean, Obamacare and all these other things that are coming down the line, it's just going to be so ridiculous to even grow your business, even if there's growth opportunities, because the taxes and rules and regulations are going to increase the cost so much, the profit margins are just not going to be worth it, because governments, in California, they take, 60% now of any business venture.
Yeah, I pity those poor fools in California that are still there, because now if they move out, it's rather hard to move out of California. You've got to prove to the state that you're out for 18 months, and it's as hard to renounce your California residency as it is to renounce your U.S. citizenship at this point, quite frankly. And it's going to get worse, because I think what the U.S. government is going to do is probably put on an asset tax, which most European governments have, probably with a $500,000 exemption to start with, where they take 1% of your wealth every year. And then they'll probably do a VAT in addition, like a national sales tax. So it's going to get much worse, because they're all bankrupt.
Yeah, I completely agree. They're turning us into constantly milked and worsening conditions of milk cows. And as you said in other interviews, you talk about milk cows, and then you talk about eventually becoming a beef cow. And, people are going to eventually say that enough is enough, and they're going to go John Galt.
Yeah, well, I hope so. I really do. It would just be personally gratifying to see that happen. But it's going to be really interesting over the next 10 years, to see how the world evolves and what happens. Uh, One of the worst things, of course, is that the U.S. government seems to be pumping for war with the Iranians, if not somebody else at this point. And of course, that's the biggest disaster.
Yeah, I completely agree. That's what worries me the most is the potential of being drafted into a war. Because I think as the economy, if history teaches us any lesson, that as the economy gets worse and worse, normally governments almost always take their population to a very large war to get their mind off how bad the economy is and to redirect the blame.
That's exactly right. They have to blame somebody else, and it's always those damn foreigners. No matter what
Or those,
country you're in, it's always those damn foreigners. So you're quite
or the greedy speculators, not the politicians who overspent all the money.
no, you're exactly right. So I guess the thing to do is to hold on to your hat because we're in for a wild ride in the years to come.
And I think people can definitely protect themselves by reading and listening to all the great interviews that you guys do over at Casey Research and your paid newsletter subscriptions, because I definitely enjoy reading the articles you guys write. You guys have a lot of great writers over there.
Well, I appreciate that, and I'd certainly to put a commercial in there. We have a daily free publication, which is actually very good too. That everybody ought to subscribe to. We cover resources, oil, technology, things in general. So it's a daily publication. It's very worthwhile reading.
Yeah, and you have very good analysis of the markets from a free market perspective using the Austrian school lens, which I think has just helped me immensely as an investor and a speculator improve my returns, improve my family's investment returns. And we were buying, when most other people were selling after 2008 market crash, we couldn't deploy cash fast enough, and that was because I was following Casey Research and other work and stuff like that. That conditioned me not to think like a sheeple.
Well, come down here and visit us in Argentina someday, Jason.
I definitely will. Thank you very much for your time, Doug, and hopefully we can have you on again soon for another podcast.
Okay, my pleasure.